you have been thinking this is coming for a while, so maybe you're not so surprised about what you heard. But when you hear Calvin McDonald talk about the macroeconomic environment being sort of the issue,
yep.
Do you think that's true, or do you think it's more just the brand losing some heat?
I think it's both. Look, on the macro, you can't run away from that. And the problem with Lululemon, what it faces from a macro standpoint, is mall traffic is starting to erode. And this is a company that is at peak sales per foot. To give you some perspective, mall traffic or mall sales per foot averages around $400. Lululemon's a quadruple that, right? So that's a problem. If mall traffic starts to erode, the company's just seeing less consumers. In addition, the company's business has been eroding or starting to decelerate for a number of quarters, and that's in conjunction or coinciding with the rise of Alo and Vuori. Alo and Vuori are building stores very close to where Lululemon's are, and that's a problem. So what Calvin McDonald also said on the call last night, which is of major concern, he said that he needs guests, their existing customers, to spend more. Well, what does that mean? That means that a few years ago, they were spending more at Lulu, but there was no competition. Today, there's Alo, Vuori, and others.
Fair enough. Okay, Tom, so I'm going to let you jump in here. You disagree. I know you lowered your price target, but you're still relatively bullish here on the overall trajectory of Lululemon. What do you think about the potential loss of consumers or at least some potential loss to competitors?
Yeah, look, I definitely think the competition angle is. I think there's definitely some validity there. Alo and Vuori have made a lot of headway, and they certainly have done a good job co-locating their stores in the same real estate where Lululemon's located. I would say a couple of things. Number one, Lululemon has faced competitive threats before. Whether it was, Athleta or Sweaty Betty, or there was a period of time where we all thought, Nike was going to make a bigger push with women, and that was going to stifle Lululemon. And, that each time they fought through it. And, I think that with a renewed focus on product innovation and product newness, they can help fight through. I would also say that, the athletic market over the long run has been a share taker within apparel. Basically, just the way people dress is getting more casual year after year after year. So it's a growing pie. So I do think that you can have multiple brands growing and performing well. And I also think Lululemon has a very, very big international opportunity that they're now tapping into, which can help drive growth while the North America business experiences a much more modest rate of growth go forward.
Randy, what do you think about international? I mean, obviously much stronger, up 20% compared to America's flat, but still 25% of the business.
So international's great, but it's not accelerating anymore. So that's a problem in itself. In addition, international is not the big piece of the pie here. So it all comes back to North America. And I think what's going to happen next is actually pretty scary, because the company guided below expectations for the year and for the quarter, but that's only on modest operating margin compression, about 100 basis points. What we've seen with other retailers out there, as business slows, as markdowns rise, as inventories pile up, margins can collapse pretty aggressively. So what we don't have yet in this stock, the stock is down, but what we don't have yet is an earnings crash, which could happen very easily in the next couple of quarters. We're actually at $12 of earnings for this year. The street's at $15. Again, on the streets only on modest operating margin compression, and so are we. We're a little bit larger than that. But at the end of the day, if mall traffic erodes, if markdowns pile up, their inventory is going to be up high teens at the end of the first quarter. You've seen this from other retailers. Once those inventories build and they don't sell through, markdowns ensue, gross margins compress, operating margins compress, earnings go down. And that's actually what we see lastly for this company this year, is earnings go down for the first time in company history. That's a problem.